Good morning, everybody. Welcome to the Flow Show. Here we are, Wednesday, the middle of the week. See if we can get over this hump. I was off yesterday, had a few meetings to take care of, and looks like I missed quite the ball game yesterday. Let's see if we get the same today. Morning, Kay. How you holding up?
Morning, Ryan. Yeah, I'm holding up. I'm holding up, mate. Yes, indeed. Movers and shakers in the market.
Yeah, absolutely. Lots going on. Lots going on. Firstly, going to start with some good news. For those that don't know, there's been an ongoing appeals case going on with the people who were convicted over the LIBOR rigging scandal. Among those affected is our very own Stelios, and those convictions have been quashed in the Supreme Court of the UK. So that's good news all round. Finally, some justice for those guys. This is probably just the start of things to come. They'll probably go looking for some compensation, as they will be absolutely entitled to. A complete scandal that was. But good news today anyway. And no doubt they'll all be out celebrating. Right, anyway, let's get on to what's going on here. And just a little heads up. As you can see there, we've got something big coming as we transition from Forex Analytics to Trading Analytics. If you are in our platform already, in our chat room, on our dashboard, you will have seen that we're dropping some little bits and pieces, stuff that we potentially trialing and looking to add to the site, and we're giving our current users first access to those, just to see what they make of it, get some feedback. We've dropped what is, in my opinion, a very exciting tool in our platform. And I can't tell you what it is, but if you want to have a look, then you could also join our chat room right now. We are running a 40% off sale for the summer. So look at the website for that, and you'll get to look at this new tool, which is only there for a short while we're just testing it out. And then all being well, be rolled out into the new platform later this year. So check it out. It is awesome. Kay, you've seen it without giving anything away. What do you make of it?
Very cool. Just very cool. It's a really, really nice tool. I like it, and it gives us just that little bit more in Forex Analytics, soon to be Trading Analytics, where traders can get a full suite of goodies when being in our community.
Yeah. The only thing I'll add is that this is, you won't get anything like this anywhere else except at an institutional level. That's all I'm going to say on the matter. So if you want to check it out, go right ahead, and you'll see all the goodness that we've got in there. But we're not allowed to tell you what it is. Anyway, right, let's move on. Probably the big news overnight was that the US and Japan have finally agreed a deal. Trump dropped the bomb. Well, Besant started dropping a bomb yesterday, pretty much saying that things were going well and there's a good chance that a deal may happen. But then Trump dropped the bomb, saying that the US and Japan has reached a massive deal covering trade and investment, and that Japan were going to invest 550 billion into the US, and that 15% reciprocal tariffs have been agreed on goods, including autos, and that Japan will open its market further and will match US tariff rates. They're also going to make a deal with Japan on LNG, and Japan is also going to form a joint venture with the US in Alaska. So much fanfare. We've finally got a deal on the table, and probably the biggest deal to date. That's even including the sort of modest semi deal that has been going on with China. That's still ongoing, obviously. Initial reactions, though, US automakers aren't overly happy. They're looking at things like labour and obviously the input from Japan on the auto industry, but that was obviously early reactions, and we're going to get a lot of those. The big association, Kinderman head, said that a trade deal reflected Japan's national interests, but that the tariff impact will be significant. So, not not hopeful on the Japan side that they're going to avoid any big cost or tariff pressures. PM Ishiba was out, saying he cannot comment on the impact of the trade deal until it's been fully reviewed. Though he said that Japan and US agreed to lower their auto tariffs to 15%. Later after that, there were reports circulating that he was set to resign in August, which was later denied by himself, saying that no decision is made. We've got a lot of this. Will he resign? Won't he resign? It really isn't that important. He said right after the election that he will likely only stay on until a trade deal is finalised and some other domestic issues as well are sorted out. So we know he's likely to be going. We need to probably look forward as to who's going to be his replacement more than the timing of when he goes. However, he did get a little bit of backing off his mate Akazawa, who's been doing most of the trade talks, who said that the deal is a result of PM Ishiba's strong leadership. So two questions I've got for you, Kay. Finally got a deal. Not that the yen knew what to do with it. But could Ishiba potentially stay on if he sees a pickup in sentiment for his leadership, or is this a done deal and he's going?
Let's take it backwards then. Ishiba, I'm not sure because he had a meeting overnight with those LDP heavyweights under who Aso and then I forgot the other one's name, and they are two of the guys who actually would like to see him go. So I think the jury is out on whether he stays or not. Maybe he can buy himself another month or so. So that is still not a done thing. I still expect after the election loss to see some kind of perhaps cabinet reshuffle or renegotiations before he really decides whether it's time to step down. And we also know that if he steps down, since it was not an election for the LDP leadership, that means that if he steps down, they have to call general elections over there. And now it also remains to be seen whether the LDP is ready to go into general elections. So I think there's perhaps today a few more questions than answers on him staying on or not. Now about the deal, it's obviously a big deal. And by the way, Ursula von der Leyen and they have this kind of life thing going on right now where they're announcing a competitiveness alliance, which is also including Japan because they are part of that rare earth supply chain thing as well. So it's a double positive to get a trade deal to pay less than the 25% on cars. We still don't know about the real details on other stuff. Chips seem to be okay as well. Where we still have a bit of uncertainty is that famous $550 billion investment fund, because it seems to be one that the US is going to manage. They are going to run away with 90% of the profits, Japan only 10. And then Ishiba nor Akazawa really gave too many details on that investment fund. And that may be something we need to look at as well. And I think there is, even though yen has been trading positive, and we were talking about that in our room this morning, it started before the announcement of the deal. So whether there's been a bit of insider trading or not remains to be seen. But yesterday I said in the room, wow, this yen is trading like if somebody knows that they are close to a deal. Because we know that Akazawa was in the US. So I mean, there's a lot of positives to take here, but if you say that you are going to invest $500 billion in the US, they have to come from somewhere, right? are they already in the Japanese coffers to go and invest? Of course, it's not going to be done in one deal, but could it be that that is even ending up being a bit yen negative if they need to buy the dollars to go into that investment fund? So yes, it's obviously a positive, and I would, as I said, straight away add this potential cooperation with Europe as well. So yes, there is positives for the yen. Yes, this is an expected reaction. Where can it lead us to in the yen is I'm still having a few questions about it. Price action will tell us obviously, and I think we can continue to trade a bit stronger yen right now, but then keep half an eye on those crosses, as we usually say. Okay, euro yen is back below 172, but it's less than, it's only like, it's a little over 0.5% below the prior top, which is not really massive. If you look at stuff like sterling yen, Aussie yen, Kiwi yen, they're all still pretty beat in my opinion as well. So I don't think the market is 100% on board with the stronger yen after that first reaction or the reaction into what we had, because obviously the market will also be looking at what the Bank of Japan is going to do, what the fiscality of things will be looking like. We have seen the Japanese yields pulling higher. So there's still a few what is it, known unknowns, as you call them.
Yeah, exactly, and yeah, I'm not sure what them. It's once again a lesson that you think you might see a certain the price moving a certain way on a certain headline, like the trade deal, and then you get it, and all of a sudden it's gone the other way again. So yeah,
Yeah, yeah,
that's markets at the moment.
and you were talking about those options this morning. They're still pretty high, the vol, but we know in the end, just due to the inherent volatility that we have seen over the past months, those vols, they will continue to stay high. I trust there's a lot of options in going on in the market, which in turn may keep us somewhere in a range right now, because people who have bought options with pretty high volatility, they are going to try and make their what they paid for those options, their premiums back, and that may keep us somewhere more in a bit of a rangy picture until we get all the answers we are looking for. And one of those answers is going to be the really in-house political side of things.
Yeah, and I think from the market's perspective, we're over that hump. The market's probably going to forget a lot about trading the trade deal now, like it has done with every other country. Yeah, big moves, big news on the announcement, but when they super nuts of the details, unless there's anything really market moving in there, we're probably going to be moving away from that side of things and then concentrating more on what the Bank of Japan might do now or do next. So yeah, potentially one hump removed from the Japan picture and what might affect the yen. So let's see what happens after that. Back to the government, and Finance Minister Kato said that the deal was extremely important for economic security, and was quick to mention that FX wasn't included in the US-Japan deal. Always going on about FX, those guys. We did hear from BOJ's Uchida saying that he was coming out with his pretty usual dovish slant, saying important to maintain loose monetary policy to support the economy, and running off all the other usual lines about they will hike when their outlook is realised and inflation is still not stably and blah, 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 blah. So staying, as I say, pretty unhawkish. But then he was up commenting after we got the trade deal news, and he wasn't that bullish about it anyway. He said the US-Japan trade deal reduces the outlook uncertainty, but policy will remain accommodative. He says the trade deal is seen as big progress, and it will be reflected in the BOJ's outlook report, although uncertainty still remains over the tariff impact. So he's not ready to go screaming from the rooftops that everything's sorted just yet. Moving on to another bank, and BOE's Bailey was testifying in front of the beaks with his financial stability hat on, so not too much on the monetary policy front. He did say there that he's nervous of unforeseen consequences of the pension mandating, and this is to do with Rachel Reeves and talking about the government and certain plans to get savers investing more in stocks, and they might change up ISA and savings program rules. And one of the other things is potentially the government pushing pension funds to diversify further into stocks and stuff, and that they might mandate that, i.e. make it law that they do that. But Rachel Reeves was also up before a committee herself saying that, well, talking about the pension stuff, says there's no reason for mandation if funds invest in UK projects, and says that mandating pension funds is only reserve power, whatever that is, anyway. And then she came up with this gem that the UK is still very reliant on the goodwill of strangers on buying government bonds, and that global factors are pushing up the cost of borrowing, which is complete and utter hogwash. I mean, to come out and saying that reliant on the goodwill of strangers is just a bonkers comment in itself, and I'll hold back. I'll end up on a big old rant about it. But yeah, the sooner that clown's gone, the better. Although I fear what other clown will get in her place. Anyway, moving on. We did have a bit of data that's never on the calendar. US Philly Fed Services Index that came in at a better minus 10.3 from a prior minus 25. Besant was out and about, and some comments before that Japanese trade deal, saying that we are about to announce a rash of trade deals in the coming days. The August tariff deadline for China, there will be further talks on that with China Monday and Tuesday, and they'll likely work out an extension. Then he was prattling on about Powell, says his term ends in May, and he should see through if he wants. Trump was out again, saying that Powell will be out soon, and that he's got to be out in 8 months. Said he's keeping rates high, probably for political reasons. So the onslaught is continuing against Powell. And Trump also tweeted that he will be gone soon, which got the market wobbling once again. Then there were rumours of a Powell resignation letter doing the rounds on Twitter, which soon got blown out to be pretty fake. But Kay, we're still jumping through these hoops. How much of yesterday might have been down to Powell and some of these moves in the dollar?
The market is constantly thinking, and you know what? It's kind of trading as if the possibility would be very high. There's this thing about Luna, the GOP House member there who was trying to get Powell to court for lying about that Fed refurb and lying in his letter to Congress talking about it. There is a part of it in it, but you only see it in the dollar. You don't really see it in rates or in or in equity markets, right? Which you look at the S&P 500, just to take an example, it's trading at the highs. I mean that's not something that you would expect if you want to fire the governor of the biggest central bank in the world. I think it fix something in there, but then I think also part of those dollar sales that we have seen, and I've been talking about it already. It could have been just a correction that we had as well, from 118 down to 115 and a half, and then we trade ranges maybe for a little while. I must say that the dollar is weaker than I would have expected straight away. I would have expected a little bit more range trading, but I think some of it has to do with the correlation. The correlation is back, perhaps at least temporary, with risk, We know that higher equities often translate with a bit of a weaker dollar. But I think it's really a mix of things. But yeah, I think the Powell story maybe yeah a bit, but then really I think it a lot has to do with risk, especially the past 24 hours as well. Because if you look at the dollar, how it was behaving, and 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 actually yesterday on the flow show, it was still like okay, we are going to stabilize here, and there's stuff lagging, and then all of a sudden the laggards of yesterday are the outperformers of today, and that I think really is the risk play that is really ongoing. So I think that is probably what's even weighing more than the fear of Powell resigning or being taken to court. And even so, I mean, we know that court cases before they really go to court, they may already be out next May, right? But yeah, there's obviously a small part of it in this market, right?
Yeah, yeah, very much so. Moving on to next BOE head, Mr. Carney, over at he's in now Canada's Prime Minister, of course. He was talking about trade as well, saying that Ottawa will agree a deal with the US that's in the best interests of Canadians, and that he wants a good deal for Canada, not any deal. And talking about whether they'll get one done before the August 1st deadline, he says we'll see, and the talks are complex. He also said we'll spend more time talking to non-US trade partners. Said that he apparently has had 80 bilateral deals dropped on his desk since he became PM from other countries looking to do deals with Canada. Whether that's been a little bit part of why we've seen the Canadian dollar strengthening, although it looks mostly due to dollar weakness. Who knows? But we're seeing that move happen anyway. We'll talk about that later. Trump was speaking further. He said that he and Starmer will formalise a deal when he's in the UK and meeting up with him. And said that and then said that Europe is coming in tomorrow. I don't know what that comment meant, Kay, whether the deal is coming in tomorrow or whether European negotiators are coming in for more talks tomorrow.
Yeah,
Do we have a deal on that?
I think the European negotiators may be heading out to Washington.
Yeah, so not necessarily a deal, but that will be the next big one. So what might we expect if we get a deal announced with Europe? Is the euro going to come off, or is it going to shoot higher?
Have you seen how this market has changed the way it trades?
Yeah,
Expectations for or against deals. It's changed already the way it
time.
trades two or three times since we okay in April we had like this small spike on the dollar, then the dollar got absolutely trashed. Then a few weeks back when there was hope for trades to be done, the dollar stopped weakening and actually started to move higher again. We've seen another reaction in the yen. We have seen different reactions in the euro. Um, you know what? Again, it's going to depend on how to put it really simple. I think there's two main categories or main sides of European or from the European side. Then you look at the autos and probably pharmaceuticals also, and how is it going to look for them? And that's probably how the euro will react. I think a deal. Let's assume it's a pretty decent deal for Europe. Is probably going to be more supportive for um, euro crosses than perhaps the euro dollar because a deal with Europe if it means more tariff income in the US. Yesterday, Besant was again shouting about 300 billion dollars income per year if deals would be struck. It might be also taken as a bit positive for the dollar, right? So I'd say it's going to be perhaps more positive for euro crosses than euro dollar. That's how I look at it. But then we have to recall what we were doing before and maybe look at the internal policies in the US again and tax cuts and things like that. So in the end, if we get a positive reaction in the dollar, if I need to stick my neck out, it's going to be short-lived.
Yeah, I think so too. But we'll see what that reaction is. Again, it's just a difficult situation at the moment, isn't it, Kay? When you look at the fundamentals and stuff, as long as we do, just even now, like you say, we've turned around different reactions in all this tariff trading, big spikes, dollar CAD, dollar MEX when we first got those deadlines and whatnot, and then it's all changed around again. Still making it tough. We're still in a situation where you have to wait and see before you react, rather than trying to take a side going in to something like that.
Yeah, if you talk about the dollar CAD, we have tried those multiple attempts above 137, 137.5, and I was talking about that on Face as well yesterday, and it constantly gets met with sellers, and Carney is standing strong, or trying at least to stand strong. And it seems that the Canadian dollar is finally getting some of its mojo back. It's also, and that's a difficult one. Is Canada following risk or not? In the case of Aussie and Kiwi, clearly. But in the Canadian dollar, I think it's perhaps the outlook that Canada finally may come a bit closer as well. And then there's those talks about Canada being in talks with dozens, if not multiple dozens of other countries to strike deals. That's perhaps another positive now and keeping the Canadian dollar up. So yeah, they're all reacting in a different way and in their own way at times. We've seen this dollar CAD stuck somewhere between 136.5 and 137.5 for a while, and then now all of a sudden we have the weaker dollar again, and the Canadian dollar just picked up steam, as we're seeing in the Aussie and the Kiwi as well. The commodity currencies are doing pretty well, and that despite oil trading weak. I mean, it's still sitting around
Yeah.
$65. So Canada is really not on the oil bus right now. That's clearly not the case. There's bigger fish to fry.
Yeah, and this is looking really interesting. This chart in particular, because like a lot of dollar pairs, we've seen dollar weakness coming in pretty much all year, and this was the first time we'd really seen an attempt at a significant bottom. So there really is two things that's going on here down at this level. We're either going to hold it or we're going to break it. If we hold it down here, I got stopped out my prior longs at from 136.20 at 136.60s. Well, the balance of my longs, I've been knocking out bits all the way up here, but got trailed out the rest of them. If we do hold anywhere down here, or even here, then that could be a very significant bottom. Okay, because that will just cement the fact that we've had 3 attempts down here over a decent amount of time, pretty much a month. And that will be the strongest support action we've had all year. But if we break, then we're probably going to leg much lower. We'll probably be 135 pretty quickly, and then we'll be looking down around these sort of zones down here, down 134.80s, 133s, these sort of levels. So it is, yes, mate.
Yeah, there is that bottom just around 134. I think there is a possibility we are going to go there.
Yeah, could well do, but it all depends on what happens here and now. As I say, we get a strong bottom down here, and I might be inclined to try it. You don't need to be a hero down there against any of these two prior lows. Then it could be significant, and I'd expect at least to move back up towards these highs after that. But as I say, if it does break, then it could be curtains, and we are heading much lower. So this is going to be a big inflection point for dollar CAD. A bit of a make or break level if we get there. Dollar yen, I was looking at in our room as well. We're a bit hit and miss at the moment. Okay, we've got 147 up towards 147.20s resisting. So this is looking like it's confirming this break lower, although, you know, we're bouncing around in 100 pip range pretty easily at the moment. This 50 was a bit washed out. See if it holds a second time around. Again, this 146.30 level I've got here, we've had prior extension through to around the 20s. We held that again, so this is going to be a level. Really, if you want to know what's going on with dollar yen, if we're breaking back above 147 and holding it, then we're going to keep this trend going, and we're probably going to head back up to 148. If we're breaking under here, 146.20s, then we're going to be going lower. How low, I don't know. But look for, we've got this range here. Look for a break, and if it's confirmed in particular, then that's going to set us probably on our next directional move. So you don't need to guess. Let the price action tell you what's going on. Another one, dollar mex, which I'm still a bit long. Did mention if I'll get another run into the 80s, I might actually start knocking some off, which I haven't. So that's looking a bit fishy. But a potentially significant move is that we've had another look down towards this 1857 level, which has held again. So a bit like dollar CAD, similar sort of price action, though it hasn't come down as quickly as dollar CAD has. It's been more of a grind, matching the sort of grind up. So again, this could be another pivotal moment if we hold here once again. Could see it traveling back up again. My question, okay, as I mentioned in my analysis earlier, if we're seeing the protection of 1850 parked up around here, is all the protection sitting up here, or is it going to be layered down to the level? If it's all parked up here, a break could mean we go through that 50 level pretty quickly. If it's layered, then we're going to see a grind.
I'm not sure whether there is like real protection also. I still think we are in this phase where, and it's left untested. So I mean we don't know yet what's going on there, yeah, at 1850. But I'm still with the same view. I'm flat, by the way. I sold it a little bit, as you know, but I'm squared it up yesterday, so I'm flat and waiting because it is such a big level. I'm going to say that it's going to be very slow, perhaps down to 1853, 52. But if that goes, I think then we're going for a very quick look down to the next one there around 1818. That's how I see it, because it's holding up extremely well. But it also means that if it's not holding anymore, the buyers are gone, right? And
yeah.
But is it, you know, that's the thing. Is the mix strong enough to trade it? Because there's one thing to do carry trades. There's another thing to see weaker dollars, but we still don't know about really how it looks in trade deals and etc. with Mexico. So has the mix really the strength to go for it? And that is still my question, and that is why also I bought it back yesterday. It's just, has it got that strength to go? So, and for as long as that level holds and the people are parking in front of it, there's perhaps less reason really to be short dollar mix right now. But yeah, I think if we get down below 83, 52, 53, I think then we may all of a sudden have a look below and do 1 or 2% in very quick order. And then it'll also depend on the rest of the dollars, of course. Huh?
Yeah, exactly. This is another one where you can have an idea now, and it might not be the same idea in 6 months' time. You know, I think, yeah, there's still tariff negotiations going on, but obviously, I think the big thing is going to be the USMCA and whether Trump's going to rip that up and do it new, or just tinker around with what the prior deal was and just moan that people weren't upholding it. So that's the humps that's facing CAD and MEX at the moment. But yeah, it is similar to dollar CAD. We've got this low in play. It has been playing out a bit similar to what we had here, and that saw a much bigger rally. This one's been a much weaker rally, so you need to take that into account. So yes, it's possible that again that we might be basing here, but as Kay says, we still haven't got that test of 1850 to see what that's really made of. So that's an interesting one to look at. I don't know whether I'll get out my longs, or I'm still maybe going to have a little long or add to my longs against this 1850 if seen. But trading at the moment is a fluid situation. My plan 2 weeks ago might not be the plan that I need this time around. Right, so we're going to clock K. I'm going to bounce it over to you, mate.
Yeah.
Click, click.
Okay, let's take Hannah's question first and have a look at Euro Swiss. And I'm going to use just one word to describe this Euro Swiss: horrible. This thing is not even rising when euro is doing better against the rest. It's not going up when risk is doing a lot better. We have seen, what is it now, 300 pips rally in the S&P, for instance, and euro Swiss is still hanging here. Yeah, it's a dollar thing. Dollar Swiss got hammered again and was capped around relatively important levels. But with risk and with the CPI and whatever data in Switzerland, not even holding a 30, 40 pip rally is horrible, right? So I'm afraid to say that perhaps the next time this goes through 85, 90, there's going to be a stop run unfolding. Perhaps there's I guess quite a few people holding on to longs in Euro Swiss. Hoping as well for a bit of SMB action if we get again around this level, actually 90 figure. Uh, but it's not bouncing at all. We've heard that on the Q1 this year, and I guess Q2 would have been the same. Central banks have actually hiked upped their portion of Swiss franc in their FX reserves, which is still, and I have to add that all the time, which is still an extremely small portion of their FX reserves, but they have been buying Swiss francs. So it is perhaps still part of this. I thought that they would have been done by now, and then with the positivity, we at least would have a start of a resemblance of a bounce in Euro Swiss, but it's not happening. And I reduced the position, but quite a while ago I reduced the position somewhere here, like early July. I'm keeping a very small part of it, but it's really not doing what I would like it to do, and that is bounce. So I'm a bit afraid that without SNB, and as Joao says, they may be on vacation. Without the S&P, this could just continue to slip and slide. And having a look at 92 and a half, maybe even 92. But you know, we never know about the S&P. But you know, hopium is not a strategy. So I'm afraid it looks like we are just going to get through the level if nothing else happens. Because if lower inflation, if zero interest rates, if not too good numbers out of Switzerland cannot put pressure on the Swiss franc, then I don't know what is going to put pressure on the Swiss franc. Now, we could argue, yes, Switzerland has a trade deal, or at least the structure of a trade deal with the US that is positive Swiss. Yes. And we still don't know about pharma and things, and the Swiss they do have a bit of that as well. Yes, could be behind that as well. But put it all in the balance, I would have thought we would be rather trading around at least high 93s and not high 92s where we are right now. So that for the Swiss franc. And as I was saying, we when we saw the bounce in the dollar Swiss, we were talking about that 80 those high 80s, yeah, high 80s, low 81s. We didn't even get there. We stopped at 80, 60 and straight away started to come back down. So that is still an indication that that the Swiss franc is still one of the stronger currencies. Moving over to the antipodians, and remember what I said yesterday? That both of them like were real laggards. Well, it only lasted for another hour, and then an hour or two, and then Besant came up, and all of a sudden things were looking a lot rosier. Risk got hoovered up, and we broke through that 65, 35, 50 on the Aussie and didn't look back. And now we are closing in very, very rapidly on 66, which is going to be, as we can see here, your next big hurdle, okay? 65.95, 66. We couldn't get above it last time. If we do, we're probably going to have a look at that trend line around 66 and a quarter. And why not push even harder if we manage to break there up to high 66s. But what a few hours can do, and just a couple of comments can do, right? We also know that there was those talks about the AUKUS deals, but I think it's really a combination of the weaker dollar and better risk that all of a sudden put the fire under stuff like the Aussie, and then especially the Kiwi. And the Kiwi was the biggest laggard. And yesterday I even said like, oh, we had like those two spikes, we can't hold them. So the danger side is down there. And then we have those comments, and then all of a sudden around, and that happened right after those comments started to filter through on a potential trade deal. And when Japan does better, Aussie and the Kiwi, they have trade relations with Japan. They really benefited from it, and Kiwi flew through it. Didn't well. I mean, we stopped for maybe a little bit around 60 the figure, but then straight away traded higher. We are just in a little bit of a traffic zone here, but that is one serious dose of vitamins for the Kiwi, right? And so now we'll have to look for a different little bit of a setup. If already this can hold 25.30, we could have a look at the next level, 60.60, and then I was in the longer run, it has held the channel. So are we starting to dream about a move back above 61? It'll depend on the dollar, but why not, and one of the things that we will need to look at, and then I come back again to crosses, okay? You look at the Euro Aussie, and Euro Aussie had that spike again. I was speaking about those multiples and multiple spikes, and I I thought we broke above 79 and a half or so, and then I covered it. But yesterday I sold again, and Mark as well in our room is short of it as well, and now we are already back to the support and actually trying to break this trend line support here. This is what risk can do to currencies. All of a sudden, you have a complete 180, and can it continue? Yes, I think it can. If we manage to hold now below this 178, call it 10, we could have a look down mid 177s or even low 177s. Go back and have a look at the low here. This is a possibility for as long as the market continues to trade everything in a much more positive way. I haven't really looked too much lately at the Euro Kiwi, but here again, and there it's even more violent, as I said, than on the Euro Aussie, and here as well. We were in a channel and we broken through it. 194, 35.40. We're trading just below here, 194.15. We have to know that both Euro Aussie, but then especially Euro Kiwi, I will say as well, because due to the liquidity or the lack of it in the Kiwi dollar, those things can move relatively fast. So any hiccup in risk could actually get this moving back higher. But for the time being, we are breaking down a bit in those pairs, whether it is those Euro Aussie, Euro Kiwi. I think we could actually see it in Euro CAD as well, but I think for the Euro CAD it's less obvious because of the Euro rally that we had as well yesterday. But we are, as we can see, trying to break below. So the next one is going to be here around 193.5 on the Euro Kiwi, which is about give and take 0.4 or so percent away. But breaks like that, if they confirm, so ideally we should have a bit of a retest, maybe even a retest of the 194.70, and then continue lower. But just keep a close eye on those because those are real risk indicators in the markets. All right. Um, what else? Yeah, well, first before I go on to gold, cable is trying to break above. Yesterday I said the expected range, top end of the range, I was thinking about 135 and a quarter-ish. We're trading a bit above. Don't forget sterling also is a bit of a risk currency, so sterling is doing a bit better. Market was trading a bit of the Reeves risk yesterday, but then with risk doing better, the sterling has regained some strength. Perhaps also with Starmer being over in the UK. Watch what's happening on the day around 135.25.30. Okay, a hold, which is really very very close by, could bring this perhaps gradually up into the 136s. But wait for the US session to start, I'd say, because if we get back below there and then confirm and the 135.15 perhaps, we may still do the range, and this being just a small overshoot. For the time being, though, it is trading relatively positively, and actually sterling is doing better than I would even have anticipated. Quick look at the metals as usual, and then we close it there. No change. 2 sessions of heavy US buying. Okay, can we get a third one? We will see when they come in about an hour or maybe 2 hours here. But we can see the 2 sessions started around 12, 1 o'clock our time. US buying, and funny enough, Asia is not for the time being. But the market will for sure have its eyes peeled on what is going to happen in the US. 34.15, very close. It's trading 34.20s, maybe too close for comfort. Look at what's happening. 34.07, 34.03 or so, or 2. If we hold 34 and they're coming back in, it could easily target 34.5, and why not? Have a look back at what's happening at the previous all-time high. Yesterday, somebody asked me about the long term. Can we reach 4,000? If the US is buying, is putting their shoulders under it and giving it a lift, why not? Anything can happen in this market. I found it a little bit well counterintuitive, because usually if you get trade deals, if you get a bit more certainty in markets, gold doesn't need to be hedged or used so much as a hedge. But these are two very heavy US sessions, okay? So I would not dismiss them. And if they start again today, I think some people are going to try to accompany it, and then we may indeed see the move back up to 34.5, and why not 35, okay? Silver, same thing. I'd say it's rather following in sympathy, but it also showed its own strength, and we are doing it again. You go to the next level, you hold. You go to the next level, you hold, and now it's already holding the prior high here. So I think 40 could be seen. That's the top end of the of this channel, and then the longer term, I still think, as I've been saying already a lot of times, that 41.5 may be around the corner. And with that, Ryan, back over to you, mate.
Thank you very much, mate. Good stuff as always, and well done in keeping the show on the road yesterday, as always. Yeah, I think we'll call that a day for today. I do wish all of you a very successful day ahead. Take care. We'll see what bombs are awaiting us later on, and we'll see you all tomorrow. Have a great day, everyone.